Welcome to the latest edition of Business Middle East, in which we look in depth at the economic fallout from the Ukrainian crisis. Continuing sanctions between the EU and Russia have been taking their toll as the impact on business keeps mounting. There is also the looming question of possible energy sanctions. Meanwhile, Middle Eastern markets have been benefiting from the situation.
There have been significant economic consequences from the EU sanctions and Moscow's response. Russia, the EU's second biggest food market, declared a one-year ban on much produce from the EU, the US and other Western countries in August. Particularly badly hit are the Baltic states, Poland and Spain, which want compensation from Brussels. It's going to hit the incomes of the farmers, who are the main people affected. We want the EU to take the necessary measures. But Europe's pain is others' gain, as countries like Egypt and Morocco plan to sell more produce to Russia. On the financial front, Russian state-owned banks have been blocked from long-term financing in Europe's capital markets, and the sanctions have increased capital flight from Russia. That could mean more investment money heading to places like Dubai and Abu Dhabi, as reflected in these recent gains. Energy, particularly gas, is another potential target. The Kremlin could leave Europe shivering in the cold this winter, but that would have a huge impact on Russia's federal budget, over half of which comes from oil and gas exports.
To discuss all this, we are joined from Abu Dhabi by Nourdin Hamouri, Chief Market Strategist with ADS Securities. Hello, Noor. Looking first at energy, what are the potential risks to the gas and oil sector for both the EU and Russia if this crisis escalates further?
There's two answers for this question. The first answer is that so far there's no risks, as we are still in the summer and none has mentioned oil or gas sanctions so far. However, the Russian would keep this wild card for some time. However, they might bring it up later when winter starts, which would be another hit for the Eurozone as a whole and likely to push the prices higher again if there will be any shortage. However, the second part of the answer is that the energy prices in general may decline further on the change of the global economic outlook. The recent global data showed that the recovery is losing some momentum in the Eurozone, the US and even in Asia, and that's why crude oil also prices fell sharply despite the escalation in Ukraine, Iraq and Libya. So it is not only the geopolitical tension that will play the main role, the global outlook will be the key from now on.
What about the idea that investors from Russia and the EU might see the Middle East as a more stable economic environment?
Yeah, well, this has been the case since the European debt crisis and also increasing by the time, specifically in the Gulf area. This region is basically stable, safe and open to any investment opportunities. Since the European crisis, the region saw a notable inflows and investment from Europe, and specifically from Europe. In return, the Gulf region also opened many business opportunities, and one of those opportunities is basically the recent decision in Saudi Arabia to open the door for foreign investors to trade stocks. So as far as the tensions and the financial unrests continues in the Eurozone, Russia, or whatever in the US or even in Asia, the region will always benefit from these kind of tensions and unrests.
ADS Securities Chief Market Strategist Nourdin Hamouri, thanks for joining us.
Thank you for having me.
That's all for this edition. For more business news, you can always visit Euronews.com or Euronews Business YouTube channel. Thank you for watching. See you next week.